listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. I deliver it every day, and we have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it. And while I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And we are checking the markets for you this morning. Dow Jones Industrial Average off about 48 points. Oil down 28 cents per barrel. And I'm not getting a rating on the 10-year Treasury right now. Having a little bit of technical problems with one of my computers here. 10-year Treasury, 2.186, down almost 3 basis points. The Japan, how about the Japan 10-year? 0.037. So having a little trouble with some of those 10 years. They're not doing as well as they had been doing in various markets. So we are checking some of those things out for you. Yeah, a lot of fun in the markets right now. It's a bit of a roller coaster. We've noticed that going back and forth a little bit, roller coaster type activity in the markets. But we are also looked at what's going on within the home prices. New home sales skid to a 7th-month low in inventory. We did see that one coming out in the markets this morning. 7-month low in inventory in the new home sales. That's because there's so many people out there looking to purchase new homes. When they're all out there looking to buy the new homes, well, you know, then there's nothing out there to sell. The inventory, we've had 25 consecutive months of number of homes available for sale have dropped. 25 consecutive months, the number of homes available for sale has dropped. That gives us an idea of why we are not in a bubble, why the markets continue to do well for us, why we continue to see prices increase. It has nothing to do with anything beyond very, very simply. Prices, in fact, are up for every quarter for 6 consecutive years. Every quarter, 6 consecutive years, home prices have been increasing. So as we continue to watch those numbers go up, it's very simple economics. We're watching it. The numbers are going up. The reason they're going up is supply and demand. We are still at unbelievable low amounts of inventory. That's why it's going the way it is going. Also watching for you, look at what's going on around the world. ESPN in the news right now. Hard to believe this one. They pulled a reporter. They took the reporter out of a game for the University of Virginia. Why did they pull him for the game? His name is Robert Lee. Does that make any sense? Can anybody help me with that one? Can anybody give me a logical reason why you'd pull a reporter because his name is Robert Lee, an Asian American? They thought it might be a little bit controversial because of what went on in Charlottesville.
You're absolutely useless.
Yeah, apparently they are absolutely useless over there at ESPN. Maybe that's why ESPN is having such problems. Instead of worrying about dealing with sports, that's what we watch ESPN for. I know it is entertainment sports programming is their real name. But the idea is they're synonymous with sports. And they're trying to be political. Get out of the politics. Maybe people will start watching you again. People, I believe from the folks that I talk to, people are yearning to get away from politics. They're tired of all this political stuff. They don't want it. They want to be able to go and get some entertainment somewhere else. Entertainment value. They're not looking for politics 100% of the time everywhere with everything they do. Yet some of the networks, they just cannot figure that out. They're having trouble understanding. But you know something? That's where we are in America. If you want politics, you can go to MSNBC Hee-Haw. You're not going to get accurate politics. You can go to the Clinton News Network. You're not going to get accurate information there. Did you watch the president last night talking about all the lies that come from them? So you can go to Fox News. They've got their slant on everything. But you know what you're going to get with every one of those. And that is the whole concept right there. If you want that information, fine, go get it. Go to those sources. That's where you're going to get it. You know what you're going to get every single time. But the issue on the other side of the coin is if you don't want that data, if you don't want that information, if you're looking for something different, you wanted to go to ESPN, but no, you can't do that anymore because all they care about is being political as well. They had Keith Olbermann, total waste of time, waste of humanity. But the idea there was he was also bringing politics to the network.
Nothing like a little air superiority.
Yeah, that's what he thought he was. It's just amazing how we continue going down this road and people don't want to understand. It's not going to be a winning method for everything in the world to be dealing with politics. So when you bring out and take this person out, Robert Lee, because he has a name that could be construed. Does anybody believe that he has anything? Does he know Robert E. Lee? He probably doesn't even remember Robert E. Lee. He might have read about him somewhere. But that's the issue. We're not looking for that kind of stuff. Unbelievable how it just continues. And, we just want to get away from it. Give us a break. What was that McDonald's commercial? You deserve a break today. Unbelievable. Moving right along. 1/3 of America. We'll save this one for a little bit later in the broadcast today. We're looking at housing crisis has roots in slow pace of building. California's housing costs are driving poor and middle-income people out of their housing like never before. While some are fleeing coastal areas for cheaper living inland, others are leaving the state altogether.
Surprise, surprise, surprise.
Homelessness on the rise. California is home to 12% of the U.S. population, but 22% of its homeless people. Cities that have seen dramatic rent increases, such as San Francisco, Los Angeles, attribute their spikes in homelessness directly to a state housing shortage that has led to unprecedented affordability crisis. Housing experts trace the problem back to the 1970s backlash. The backlash began to arise in coastal communities, in particular from neighbors who opposed new housing in their neighborhoods. California communities are vested with significant authority over land use decisions about how much can be built and when and where. Really, when you think about it, does that surprise anybody then that we are getting to the point where there is a housing crisis in our country, in our communities, in our state? Well, we want to keep we're importing low-income individuals. Nothing wrong with the individuals. It's just that the skill base that we're importing or allowing the illegal immigration coming through, what's that causing? What's that bringing to the communities? Well, think about it. When you start bringing in low income and prices and the availability, prices go up, availability goes down, well, eventually you're going to have a problem there. So we're at that point where we've got the problem. Now think about that concept. What's going to be the next step to it? Well, it's pretty simple. More and more errors, more and more problems, more and more shortage. That's where it is going. And we're looking at more. There are a lot of different issues going on. The biggest issue that I still see is our student loan crisis. We've still got a big problem with the amount of student loans out there. Got to think about that. We're going to talk more about student loans this morning. We've got some great information for you. We'll also talk a little bit about Powerball. That's the big subject of the day right now. And today we are celebrating, I bet you thought I forgot. Today we are celebrating National Sponge Cake Day. Is it great? I don't know if that's a good one or not, but we'll go with Sponge Cake Day. National Ride the Wind Day, I don't think so. That was a dud. But sponge cake, I like sponge cake. Add some strawberries, whipped cream. You got it made. That is the way to do it. And as you know, you are listening to Ron Siegel Radio. We're discussing your real estate, current events, financial markets. When we come back, want to keep up with the Joneses? Now is the time. That is real estate related. Good credit score, better than a hot body. And you won the Powerball $700 million jackpot. What next? We'll talk about that as well. You can reach us anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Want to keep up with the Joneses? Now is the time. Of course, we are speaking real estate. Does your current house fit your needs? Does it seem like everyone else is moving up and moving on to more luxurious surroundings? Are you wondering what it would take to start living your dream life? Market conditions around the country have presented an opportunity like no other for those who are looking to make the jump to a premium or luxury home. The National Association of Realtors reports that national inventory levels are now at 4.3 months supply. A normal market where prices appreciate with inflation has 6 to 7 months inventory. The national market has echoed the conditions felt in the starter and trade-up markets as inventory has declined year over year for 25 consecutive months. We spoke about that a little bit earlier. I'm going to share a chart on our social media that shows the relationship between the inventory of homes for sale and prices. So when you're looking at a less than 6 months supply, we are going to term that a seller's market. Home prices will appreciate, go up. Between 6 to 7 months, neutral market. Home prices will only appreciate with inflation. And greater than 7 months, that means it's a buyer's market. Home prices will go down. They will depreciate. According to Trulia's latest inventory report, the inventory of homes for sale in the two lower-priced markets has dropped by double-digit percentages over last 12 months. 16% for starter homes, 13% for trade-up homes. While the inventory of homes in the premium home category has dropped by only 4%. This has created a seller's market in the lower-priced markets, as 54% of the homes were on the market for less than a month in the last Realtors Confidence Index, and a buyer's market in the luxury market where homes were on the market for an average of 160 days, according to the Institute for Luxury Home Marketing. The bottom line, if you are thinking of listing your home today or moving up to a luxury home, let's chat. Let's evaluate your ability. Let's see what your budget looks like. Let's see if we can get you pre-underwritten, pre-approved to get into that next new home. That is the Real-Time Real Estate segment, again brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. So we were chatting a little bit yesterday. I thought I would share this with you because we really focused heavily yesterday on the one subject at hand. And I thought that I would bring up this concept and get back to this a little bit because a lot of people didn't understand what I meant by boomerang buyers. And we've talked about this in the past, but this was based on a TransUnion report titled The Bubble, The Burst, and Now What Happened to the Consumer. The study revealed that 1.5 million homeowners who were negatively impacted by the housing crisis could re-enter the housing market between 2016 and 2019. Recently, Housing Wire analyzed data from the U.S. bankruptcy courts and revealed that 6 million Americans will have their bankruptcies disappear off their credit reports over the next 5 years, and that this could possibly send a flood of more home buyers into the housing market. The chart we shared shows the total number of bankruptcy filed by year in the U.S. over the last 10 years. And when you get a chance to look at the chart, we put it up on our social media. The light blue bar represents 3.3 million people who have already waited the 7 years necessary for their reports to no longer include their bankruptcies. How would this send a flood of more home buyers into the housing market is the question. Well, as the article mentioned, in 2010, the number of Chapter 7 bankruptcies increased to nearly 1.14 million. Now, 7 years later, they will begin to fade from credit histories, enabling prospective buyers to become homeowners again once their scores improve. As we can see from both reports, the homeownership rate has the opportunity to increase drastically over the next few years with all the boomerang buyers coming back into the market. If your family was negatively impacted by the housing bust, there is a light at the end of the tunnel. You may be able to purchase your dream home faster than you think. Again, it's either you can do it now. In fact, I had a gentleman that I think I shared with you. I was speaking with him on Monday. And he said, you know, I just went through a divorce. I just moved into Southern California. My credit's horrible from the divorce. Well, what does horrible mean? Well, I haven't looked at it. Okay, so how do you know it's horrible if you haven't looked at it? Well, I know the things that went on through the divorce. Let's not go that way. Let's figure out what it actually is, what the numbers really say. Because we don't want to really just contemplate where it might be. We want to know, what is it? What do the numbers look like? What are they doing? How do we deal with them? And once we've done that, then we can go to the next step and say, okay, I understand where we are. I understand what we're doing. Now let's look and see what makes sense for him. Now, I had him go to creditchecktotal.com, and he sent me a copy of his credit report. There was almost nothing on the credit report. One new car, no credit cards, no revolving debt, no mortgage. His credit scores were decent. Now, were they great? No. The problem he has with his credit scores, there's nothing there. So if there's nothing there, then what are you going to do? You have to worry about, okay, what are we going to get? Where are we getting the information? If we have nothing on the credit report, what is the credit bureau going to look at? They can't look at hardly anything. That's the problem. They have nothing to share. They have nothing to look at. So when they're looking at nothing, what do you think they're going to see? Lower scores. So in his scenario, what we really had to do with him was go and get him some data, get him some information. So in his case, he's ready to buy right away. His credit scores are good enough right away, but he's self-employed. Okay, so now we have to look and say, okay, we need to make sure that we've got 2 years' worth of tax returns giving us the information we need to move forward. If we've got those 2 years' worth of tax returns, then once again, we're going to be golden. 2 years tax returns, not a problem there. Okay, so now what we want to do is we want to get the credit cards going. Now we know that if you go and get a couple of credit cards right away, it's going to be detrimental to your score. Not a whole lot, but it'll probably be a little bit detrimental to a credit score. Got it. Wait 3 months after you get those cards. Use them. Pay them off before the payment due date. Now notice I'm not saying in this instance pay them off before the statement closing date, which we normally do. What I'm saying is go buy a cup of coffee and then pay them off before the statement due date. If you're paying them off before the statement due date, the payment due date, you're still going to have a low utilization rate, but it's going to have a balance showing each month, which is what we want in this scenario. And we're going to continue moving on in the way we want to be moving on. That's the whole idea. Remember that the idea here is either you can buy today or we can get you on a game plan today. One of those two things is going to be the scenario. Buy today or game plan today. And in this case, it was basically game plan today. Now, he has the opportunity if he wanted to. Now, in his case, because of being self-employed, we need to make sure we've got the one of the things with self-employed individuals is they write off a lot of things against their businesses. And when they're writing off all these items against their business, in many instances, what ends up happening is they don't leave enough income. They can live, and they might be living very, very well. They might be going out to dinner every night on a business meeting. They might be traveling for business all the time. Yeah, they might be a little aggressive on their write-offs. Fine. That's fine. We have no problem with that. That's between you and your CPA, your tax person. We don't want you to be doing anything illegal, obviously. But the whole idea there is we want you just to get on a plan to have enough money. Now, in some business owners, there's business owners that we're able to help them. They've got their own scenarios. They might have to use bank statements to be able to get their next home. There are programs out there they call them a bank statement program. Pretty simple. And the guidelines say we don't have to have the 2 years tax returns because we know they're going to be ugly. We don't have to have a income. We're going to use the business data. That's what we're going to use there. We're going to use the business data. We understand. It goes back to the certain area. Now, are those programs going to be as advantageous economically? Are they going to have the same interest rates? No. The interest rates are going to be higher on those programs. But what we're really going to be looking at there is, again, that's still part of the same game planning. We're going to look and we're going to say, okay, well, if you can be a little less aggressive on your business, and you show a little bit more income in your business, then we may have the ability to get you refinanced next year or the year after at a lower interest rate. That's the whole idea. That's why I say we go back to the idea of game planning. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets when we come back. So what are you going to do if you win the Powerball? There's some ideas here that you may want to consider. And Fannie Mae, Freddie Mac, they just changed some of their guidelines. Fannie Mae is actually joining Freddie Mac in changing their guidelines on appraisals. Maybe you don't have to do an appraisal. We'll talk about that. You're listening to Ron Siegel Radio, and you can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay is available, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
In the middle of our street, our house.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990. In the Word on Wealth segment today, Brought to you by our friends at Gold Star Mortgage. When you're ready for the next mortgage, Gold Star has the programs and the products for you. Just give me a call, 800-306-1990. I will put you in touch with the right folks over at Gold Star. Again, 800-306-1990. We're going to have a little fun in the Word on Wealth segment today. We're looking at a couple of different things. First off, we're going to look at jobs, 5 awesome work-from-home jobs that easily pay, you ready for this one, $100,000 a year. More and more people are doing at least some of their work from home. According to data released this year from Gallup, it found that from 2012 to 2016, the percentage of employees working at least some of the time remotely rose to 43% of the employees from 39%. They're also spending more time than ever working from home. Part of this is that companies are realizing that flexible scheduling and work-from-home opportunities play a major role in an employee's decision to take or leave a job. The report revealed that information. Plus, businesses see that they can cut real estate costs by letting people work from home sometimes. Of course, many jobs that let you do the bulk of the work remotely can be low-paying, but not always. 10 jobs that often let employees work from home for all or most of their work week that can pay $100,000 or more. A senior medical writer. In this job, you might work for a healthcare or pharmaceutical company, writing research-based medical documents related to a disease, illness, or drug. Senior technical writers can often work from home, average more than $90,000 in pay. Back-end web developers deal with the code and other technology that a user of your site will never see, but that keeps the site running and functional. My sites are actually developed and run by a gentleman that lives in Maui. So those jobs can be some pretty high paying. Sales director. Sales directors help craft sales plans and manage salespeople, raking an average of $104,000 a year. A consultant. Yeah, we know what a consultant does best. Generally, the information is nothing. If you have specialized knowledge and skills in your field, be it IT, management, media, or something else, you can market your skills as a consultant. For example, if you're a media professional who knows how to quickly create popular articles that get picked up by other websites, you could sell your skills as a media consultant. While the average salary for a consultant is roughly $92,000, many earn far more than that. Actually, consultants do a great job. I kid them all the time. But they're basically the individual that you're going to bring in to do the things that you don't want to do. Hire your weaknesses. A UX designer. Every company is a tech company these days, in that almost all of them have a website or app that they need to function. That's one reason UX designers who make sure the site or app looks and feels satisfying to users are so in demand right now. Job prospects are solid for those who want to work at least part-time from home and average $90,000 a year in pay. $90,000. You love that one. I might look at that. Holy cow. I mean, I only do a couple of jobs a day, so that might be some fun for me. Keep me out of trouble. Keep my wife happy. Just a thought for you right there. So we are chatting this morning a little bit on the subject of Powerball. Have you played with the Powerball? Have you looked at the Powerball at all? I think I said it's $700 million is the jackpot tonight. If you're playing it, you might be fantasizing a little bit today. The likelihood of winning, it's less than getting struck by lightning twice. So I guess most of us have never been struck by lightning once, so it's the odds of winning the Powerball are even better. So think about that. I think about 35. California will probably look at 35%. So if you win $700 million, you're probably looking at $210 million cash value after taxes. 292.2 million to 1 is the odds of winning. So just remember that. Be responsible. So what if you did win? Just a couple of things. Unlist your phone number if you still have a landline. Take a leave of absence from your job so you can decide at a more leisurely pace about quitting, upgrading your career, or spending time without any employment. You might want to talk about a financial advisor, get some referrals, Here's a list of some of the things that you might want to pursue. Tax advisors who can discuss lump sum versus installments. Don't be in too much of a hurry to go cash in that ticket. I would recommend taking the ticket, going down to the bank, getting a safe deposit box, and then take some time to figure out what you're going to do. So you want a tax advisor that can give you ideas or help you make a decision between lump sum or installments, whether to pay state and local taxes before the end of the year and other considerations. Also make sure you keep up with future tax and other obligations, including payroll withholdings and insurance for all of your new staff. You'll probably have some. Financial advisors to project how much you want to be able to spend up front and every year. Legal advisors can help you address questions such as, how can you protect against the flood of requests you're sure to get for help and handouts, and loans that may never get repaid from family, friends, coworkers, strangers, charities. Think about a professional easy for me to say, philanthropy advisor too, to make sure the organizations are legit, that you get the right tax benefits. That's just a few of them. Now, I did see an article that I thought I would share with you. I thought it was pretty interesting this morning, talking about the whole concept as well, about some of the things that some people may not want to do if they win the Powerball. Again, we're looking at $700 million. So some people might look and say, you know something, I'm not going to move. I've known some very, very successful and wealthy individuals who said, you know something, I'm not going to move. No departure for some less tax state is what I want to be where I want to be. I like the place I live. I've called it home for many, many years. Maybe that's the idea. I won't obsess about taxes. So this may not make the CPA crowd happy, but lottery winnings of this scope, like I said, about $210 million on a $700 million winnings in the state of confusion here, Taxifornia. So if you make a few mistakes by yourself, yeah, what's an extra few million to the tax man when you have a sum that's that outrageously large? I don't know if anybody makes a lottery winners edition of Quick Tax or TurboTax or whatever they call that. Some people may not want to hire the investment guru. They might just want to say, okay, I'm going to take it all and put it into T-bills, something that's not financially risky. What I would recommend is putting it, you know, the vast majority in very, very safe, secure investments. You might want to play around with a small percentage, because even a small percentage of a number that big, still going to be a very, very large number. Occupational hazard of becoming an instant millionaire is that you will quickly discover how many people you haven't heard from in years or ever. Now they want to chat. Remember, no is a complete sentence. Lottery represents an ugly, ungodly sum of money, but realize there are plenty of folks with far more spare cash. Let the world's billionaires tackle the world's most pressing problems that require grand philanthropy. Give to some of the charities that are local, the ones that you really like, the ones that you care about. You might want to like the idea of continue being that bargain hunter. You may not want to go to all the fancy restaurants every night. You might like to keep your feet up on the table. You might like your job and want to do it. It's what Steve Jobs said. You're not going to work if you really love what you do. Yeah, you may want to pick up some angel tickets or some duck tickets, something along those lines. And you might even want to upgrade your car. But just remember, don't rush into anything and enjoy the day. The likelihood of you winning, very slim. But, you know, something no one ever got hurt, just fantasizing just a little bit. So there are some ideas for you on the Powerball. Just a few thoughts for you. Some ideas for student loan debt. We wanted to chat this morning quite a bit about student loan debt. In fact, I might do that when we come back, because you are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Student loan debt, ways to tackle it. We'll talk about that. And Fannie Mae joins Freddie Mac in allowing appraisal-free purchase mortgages. We'll talk about some of those guidelines as well. We want to make sure you get that information that you need. And you can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel, and if you miss any part of our broadcast, shame on you, but the replay is available. Ron Siegel 1, Ron Siegel, the numeral 1, on YouTube. Stay tuned. We'll be back in just a few.
In the middle of our street, our house.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com. Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Mortgage Minute today, being brought to you by AskAboutReverseMortgages.com. Are you 62 years of age or older? Do you have equity in your property? The reverse mortgage might be the right thing for you if you've got that, if you are in that scenario. Give me a call at 800-306-1990. We can chat about it, see if it makes sense for you. I've yet to find too many people that it does not make sense for. There's a lot of folks out there that the reverse mortgage makes sense for, and there's a lot of misconceptions about it as well. There's a lot of people that simply think that the reverse mortgage is for those that are in financial despair, that they are hurting, that they need help. Well, it's not bad. That part of it can be true. But the issue here is there's a lot of people that use that program for beneficial. They use it because it makes sense for their family. So think about that part of it as well. There are a lot of people out there that just look at that program and say, you know something, I think there's a lot of logic to it. I'm going to use that program and I want to understand it. Now, Fannie Mae has come out and they're joining Freddie Mac. Fannie Mae joining Freddie Mac in coming in and saying, you know something, I think that we don't need an appraisal for every transaction that we do. Very, very fascinating when you start thinking about that, when you understand their scenario there. It's something that just is logical. I don't understand why in the world they didn't do this long ago. They used to do it years and years ago, and then when things changed in 2008, 2009, 2010, they went away from these scenarios. But think about this concept. If you've got a property, and the property is a very, very, you've got, say it's a $500,000 property, and it can be anything. Yet you're looking at a $150,000 loan. Well, there's not a whole lot of risk in a loan like that. They understand those things, especially when you're putting a massive down payment down. They're doing this on a purchase arena. That used to be available in the refinance arena as well. But if you're putting a significant down payment down, Fannie Mae is now saying that they're going to match Freddie Mac. Freddie Mac last week extended its appraisal-free mortgage program to its purchase loans, announcing it will go into effect on September 1, 2017. Fannie is following with its latest announcement. The property inspection waivers will be allowed on mortgages with low loan-to-value ratios. The government-sponsored entity explained the change will allow lenders to offer better efficiency and cost savings. So you can save that $400, $500, $600 in the appraisal amount. Fannie announced its new appraisal-free mortgage. It figured it could save borrowers an estimated $500 in fees and could reduce closing times by as many as 10 days. However, Fannie Mae is not saying goodbye to the appraisal community. It explained the vast majority of purchase mortgages will still require an appraiser. Collateral Underwriter uses statistical models and algorithms built on a database of over 26 million appraisals to evaluate appraisal quality and drive greater confidence in the evaluation of properties, securing the loans acquired by Fannie Mae. Earlier this year, Fannie Mae updated its policy on appraisals this year and clarified its existing policy that allows an unlicensed or uncertified appraiser or an appraiser trainee to complete the property inspection. When the unlicensed or uncertified appraiser or appraiser trainee completes the property inspection, the supervisory appraiser is not required to also inspect the property. Just a little bit of an update there coming back from Fannie Mae. That is the Mortgage Minute. Again, brought to you by our friends over at askaboutreversemortgages.com. You have a credit report. It is wrong. What are you doing about it? Or are you 62 years of age and older? Think about that concept as well. You can buy a home with a reverse mortgage also. Just remember that part of it. You can purchase a home with a reverse mortgage. Moving right along in our commentaries this morning, it's amazing how we are seeing so much in the way of student loan debt. That is still a major, major issue. And now we also see that student loan debt is hurting older Americans. The crushing weight of student loan debt is a problem it isn't a problem just affecting younger Americans. A new study shows older Americans are shouldering an increasing share of the nation's collective $1.3 trillion student loan debt. $1.3 trillion in student loan debt. Think about those numbers. According to a new report by FICO, the percentage of Americans aged 65 and older with student loan dues increased 300% from 2006 to 2016, compared to 100% for Americans ages 35 to 64. The statistic will continue to rise as the population ages and older employees turn to workforce retraining programs to learn new labor skills. It was reported by Fox Business, outstanding student loan debt has increased by more than 457% since 2003. 457%. Correspondingly, average loan balances have grown among individuals. The FICO data shows that retirement-aged Americans, 65 and older, owed $28,268 on average in 2016. $28,000 in 2016. That's some staggering numbers there. And I've shared with you, I think it's probably, I don't think there's a whole lot of question about it, but it's probably the largest item that we see when we see people that are turned down for a home loan. they're turned down because they have too much student loan debt. That's where the pain point is coming from. And what are some of the items that you can be looking at? Do you understand the difference between federal student loans and private student loans? That's a big issue right there. So if you've been to college and recently graduated, chances are you have a student loan. 43.3 million people have student loans. 90% of the borrowers take out a federal student loan, according to the U.S. Department of Education. But federal loans don't always cover all of your college costs, and more borrowers are turning to private loans, according to a new study by Lend.edu. 1.4 million people currently have a private loan to pay for college costs. Experts recommend using federal loans, financial aid, and scholarships before taking out a private student loan. Understanding the main differences between your loan options will help you determine the best way to fund your education. So how they're funded. Federal student loans are funded by the U.S. Department of Education or private institutions that government guarantee to pay back in case of default. Federal loans come with more protection, such as flexible payment schedules, lower interest rates, and income-based payback programs. Private loans funded by the banks and other lenders, such as credit unions, which means the lenders set the terms and interest rates. Interest rates are typically higher and there is less flexibility to the borrower. Second different, interest rates. The interest rates for federal loans is set by the Federal Reserve. They have fixed interest rates, which means the rates won't change for the entirety of the loan. In 2017, the Federal Reserve raised the interest rate on undergraduate loans to 4.45% and 6.7% for graduate student loans. Think about that concept. So the Federal Reserve going to 4.45% when they're lending to banks at about 0.5%, 0.75%. Stick it to the kids is the basis there. Private loans can have a fixed or variable rates. Variable rates can fluctuate depending on the economy, potentially adding large amounts of interest to your loan. According to LendU, the average fixed rate student loan, 9.66%, variable rate 7.81%. Third difference, getting the loan. You'll need to fill out the free application for student aid, FAFSA, in order to apply for a federal student loan. And you'll also find out if you qualify for federal grants or other student aid. Your credit will not affect the ability to get a government loan. Why? Because they know that they've got you stuck. You can't get out of it at any time for any reason at any point in your life. That's the problem. That's why they do it to you. That's why they give you a great advantage to the student loan. What a bunch of malarkey. Get rid of the federal government out of it. Make it so it's dischargeable in bankruptcy. Help the kids out. And then the schools won't make it so easy for them to get in debt and know that they're guaranteed to get that money. Difference number 4, repaying the loan. You have a grace period of 6 months after you graduate before you have to start repaying your federal student loan. Most federal loan borrowers are put on a 10-year repayment plan, but you have up to 25 years to repay your federal loans in full. Private loans may need to be repaid immediately while you're still enrolled in college, but you may have the option to defer payment until you graduate. Option 5, or difference number 5, lowering your payments. If you are having difficulty repaying your loan, federal loans offer more options than private loans to lower your payments. You can defer your loan payments up for up to 3 years, and your loans may be forgiven if you work in public service. Private loans typically don't offer loan forgiveness. However, if you're having difficulty making your payments, you may be able to refinance the private loan. Refinancing means you consolidate your loans into a new loan and repay the new loan at a lower interest rate. Not all borrowers are eligible for that one, so you have to be careful. That's not just a given when you're dealing with that. And there are some ways to tackle student debt as well. So what are you thinking about on that one? Where do we go on tackling the student loan debt? Amazing. I wanted to get this into you. We'll talk about that student loan debt tomorrow, though. Subscriptions. That was another issue that we were looking at. Just a quickie on this one because it's not a very significant topic, but it is meaningful to you. So, are you on a did you subscribe to different items and you're getting charged for it on a regular basis? 1/3 of Americans are paying for subscriptions without knowing it. You need to be checking your credit card statements on a regular basis. And you might even want to do this. You might want to call your credit card company. Don't tell them I said this to you. Call your credit card companies and tell on all of them, when the time strategically, tell them you lost your credit card and you need to get a new card issued. And check that out. Find out who you've got these different subscriptions with. You know, $10 for Netflix and $20 for Dropbox and $10 for iTunes. When you think about all these things, they all start adding up. So just look at those and make sure that you're not one of this massive amount of people, 44% of Gen Xers, 37% of millennials, that have some sort of automatic payments that they signed up for. Maybe you signed up for a trial period and forgot to kick the trial out. These are all the different issues that you need to think about when you're dealing with some of these things. And I'm going to suggest to you, maybe you want to just go and lose your wallet, hypothetically, and get new credit cards for everything that you're doing, and see which of these items you want to resubscribe to. Then put them all onto one card so you can watch that card and make sure you still need them at a later date. And be sure to set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today, and of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun, have a great day. We'll talk to you next time on Ron Siegel Radio.